Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The global markets were caught off guard after the US job market experienced a substantial increase in January, which was unexpected and surprising. According to the Bureau of Labor Statistics report, the US economy added a significant number of jobs totaling 353,000 in January, which exceeded of 185,000, while the unemployment rate remained at a steady 3.7%. Furthermore, wages rose by 0.6%, surpassing the previous month of 0.4%. And this is the largest increase observed since March 2020. Looking ahead though, the market will now wait for the RBA, which is scheduled to update its interest rate policy on Tuesday, which is widely expected to keep holds on rate at 4.35%. However, we should keep very much a close watch on the accompanying statement and search for hints for a potential rate cut discussion. With the dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounding aggressively from the job data in the US, from 102.90 to 104.03, the market is experiencing for the Australian dollar quite heavily to the downside and now taking out this key level of 65.10. I do anticipate stops to go off down towards 64.65 and reassess from there. We do need to see a bullish response from 64.65, otherwise we could slip further to 64.10.15 before rebounding. Showing the bullish divergence for euro, the market did briefly kick in on Thursday but gave it all away back to the lows on Friday and still currently holding to the divergence. Although we are seeing lower lows, the market still can snap to the upside due to this divergence and therefore look towards 108.45.50 to 109.10.15. However, the market may find weakness as it now challenges this 107.70 and look towards 107.25 for stops, and then maybe see a rebound from there back towards that 109 area. In light of this pattern here from the RSI, it's very hard to get bearish, but we are seeing heavily supply coming into the market. The dollar surged on the back of the job data, and now we can see the market challenging this key level of 148.70.90. No doubt there will be stops above there if we see a break above 148.90, which could lead towards 149.60. It would seem that the market's been caught off guard right across the board as the dollar has rebounded back to 104. So this is more to a stop loss scenario approach, not a technical or correction. If we do see a rejection from this top side, then we look back towards the lows of 147. Sterling also under pressure as the market now takes on the challenge of 126 figure 10. A close under there from New York will give further losses down towards 125.45 or even to 124.75. That being said though, in light of this recent support, so therefore the market may be just as right across the board, just a stop loss motion and then see the correction back to the recent calls. Having reached the top side level in gold around 2052 to 4, the market did extend briefly to 2060 and then took a sudden change in sentiment. And from there we are seeing a little bit of weakness or profit taking coming back into play, which could see a move towards 2028 or towards 2016-18. But I'm not going to get negative because I still feel the market can actually reclaim the top side around 2065 later, either into this week or next. Oil, well, the market's taking out that breakout level and they're giving some concerns that we could be seeing a further slide down towards 71.65.80 or with the base holding around 70.80. I feel the market may stage a correction only if we see a close above 73.70.80. So that's the call for this week. Let's see if the market can break there and reinstate the call back towards $78 to $80 a barrel. Failing to do so, then the call for this week will eventually see the market reach the area around 70.80. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report and I hope you enjoy the great start to the new week.